let's talk a bit more in detail about the China trade data. We have Andy G joining us to give us more perspective and help us interpret the data. Andy, hi, thanks so much for coming on board. China data, of course, the December month's data shows the full impact of trade war on the Chinese economy for the first time. How bad a news is this? How are you looking at the numbers?
Well, I think that the December number really reflected a lot of front loading the exporters did in the previous months in anticipation of rising tariffs. So in December there was a significant drop because of the front loading happened before. As far as the overall numbers are concerned, 10% growth actually is in line with the global economic growth. China is not expanding market share like before anymore because of the base is $2.5 trillion. But it's really reflecting, I think, that there was a bit of a cooling in the fourth quarter in the global economy. And in terms of the real impact of trade war, it takes a while. It takes a while to happen. And some exporters have shifted production to Vietnam, especially like the furniture, garments, and so forth. So there could be some weakness in 2019. I think the real impact hasn't happened yet.
Right. Of course, that's going to be one of the big worries. But, once that happens and the slowdown in trade data comes in, do you think it will have a big impact on global growth, global currencies going ahead?
Well, I think that in terms of currency, if the tariff goes up again, as what Trump was saying, 25%, increasing from 10% to 25% in March. If that happens, then Chinese currency will go down more, and that would cause the other emerging market currencies to go down. Right now, I think it's steady. It's 6.8 to 6.9 against the U.S. dollar. That seems to be the range that the government feels comfortable about. But if the tariff goes up, the currency could drop another 10%. So that would cause another round of turmoil in emerging market currencies.
If you look at the data, it's almost like the one in 1990 when the Chinese economy grew at its slowest pace. Do we see things getting bleaker from the current levels? How is the projection at your end for this year and the way forward?
I think that the Chinese economy is slowing down mainly because of the property market has slowed down. China has had this surging property market for 12 years. It has become very overextended, and there are a lot of vacant properties, a lot of speculation, people buying properties for price appreciation, not for living. And so that has exaggerated demand for many years. So that is, it appears we are entering the adjustment period. People will realize that the property does not always go up. So the excess demand disappears, and there will be a blowback from the inventory. So, and the property sector is very large. It's averaged 13% of GDP in new property sales. So, obviously, the economy will be severely affected, like steel, cement, and so forth. So, the economy is likely to be pretty weak for the next couple of years, or even longer, before the property market is fully adjusted.
All right, Andy, thanks much for coming on board, for giving us your insights on this big development. Of course, on the negative side, China's trade data extremely disappointing for the month of December.